In this video, guys, I'm going to talk about, is this rally sustainable? Stay tuned. Hey guys, warm welcome to you. All right, so as I speak, we're in a situation where market's been slammed to quite low levels, multi-month low levels, and we've had a really big ripper bounce off the lows. And everyone's asking the question, is this rally sustainable? And what I'll do is I'll put a chart there so you can get an idea of exactly what's going on right now. Okay, so this is the question, is the rally sustainable? And many people are kind of positioning short, they're kind of looking for it to go back to lows. I think many institutions are kind of maybe not been buying so much of the stock that they perhaps wanted to pick up. So we're in a situation, and I want to dissect not just necessarily this rally now, but how the dynamics of the rally change and change the fundamentals of the trade idea. So let me explain what I mean. So you've got a kind of down move, whatever that down move may be, catalyst driven down move we have in this situation at the moment, and we've got to bounce off the lows. Now, the normal, a standard approach is to say, okay, the rally is going to run out of steam at some point, and very often we'll get at least an attempt to push to lows. So one of the ideas that many people have, and something that I often try to do, is kind of look to position short at some point for some move back to lows. Now, if it goes through lows, obviously that creates a new strategy, a new idea, a new trade. If it has a higher low and kind of starts to get a bid there, then maybe you go, right, actually that was just one more little shove, and now we're probably gonna, maybe we'll push back to highs, and you can start to frame this level here, this high here. So, you know, I don't necessarily predict what's, where that's gonna go, because we could have the higher low, we could have all this kind of stuff that go to lower lows, but very often we're gonna get some kind of push back into those lows. Why? Because, a lot of people who've been buying this, seeing it starting to stagnate as we push up, get nervous that maybe things aren't changing and start to liquidate, start to kind of take profit. Some of the shorts might start to come in and get aggressive. That's the theory behind it. Okay, and we often see that, very often we see that. We see that a lot intraday, we see that on 15-minute charts, 4-hour charts, and a lot of daily charts as well. But in some circumstances, like the one we're in right now, we have a scenario where that bid is pretty relentless. And that bid just keeps going and going, and we get these extended moves. And I did a video where I talk about that's actually my nemesis, something I'm not very good at trading, when we get these unusual conditions where we get much more extensions than we would get under normal circumstances, which just throw me off a little bit and just kind of, you put me a little bit behind the curve and have to kind of reset and kind of reassess and work out what my next play is going to be. But that's another video, and hopefully you guys check it out if you're interested. So, but what I want to talk about is how the dynamics shift when you start to get a hated rally, if you like. So what I mean is that, when we're in this situation, yeah, there's some people who have been shorting it down here and are getting squeezed. Yeah, there's some people who are kind of late to the long party, but that's the minority, and that's kind of, sometimes you can spot that easy. You can spot when that last little flush of shorts is, and very often I'm not going to start to get short on a pullback after a big down move until I see one last flush. And I see one last little flurry. And intraday we see that very often, guys. Big move, down move, and then we get kind of push back up, push back up, push back up. It kind of pops to highs, puts that little wick in, and then starts to roll over to close. It's a repeatable pattern that happens very often. And it's, if you can time that, then that's great, because you can time this. It's the case of pushing, pushing, pushing. You're not involved in the rally, or maybe you are, but you're waiting for that final bump just to fail and roll over. You can frame and structure your trade quite nicely, risk reward ratio is quite good, and you assume the trend is going to resume. If it doesn't, you've got your stop. If it does, it's great. And sometimes you get, you won't have it for a while, but sometimes when you get a real beast, it just keeps going through the lows to the lows to the lows, and you're just trailing and coming out just before the bell. By the by, why does the dynamic shift when we kind of have this scenario? So everything's the same, everything's the same, until we almost get past a tipping point, if you like. There's almost a point on the chart which changes it from what people are expecting, or seasoned traders are expecting, to the chart's almost irrelevant anymore. The chart has almost been thrown out everywhere, or just been discarded. And it's when we get past that point where it's a reasonable pullback, and all of a sudden people start, because if you think about this, let me just kind of go back while things are in my head. When you're at lows, everyone's two sides. We're going to fall through before the world's ending. I'm going to buy a cheap stock, I'm going to buy a cheap thing, I'm going to bounce. And there's bang, bang, battle, intellectuals fighting over it, and someone's right, someone's wrong. And sometimes the intellectuals are battling all the way down, and then eventually it pops back up. So when it pops back up here, you've kind of got the people who bought lows who were feeling quite smug with themselves, people who thought it was a bit late, you just get different scenario, you just get a kind of this battle going on. When you get past that point there, you get this situation where many people are going, okay, well, maybe we go to lows, back into lows again, and people are waiting, and people are expecting that, and people who aren't long are waiting for a little dip to get long. People who are short aren't covering because they're like, you know, I'm going to cover here because they're probably going to get a couple of days down move. And so it's almost like it's a pain rally. From there on, it's almost like everyone involved in it is in it because it's painful. People who are now buying are buying late to the party going, oh, gee, you know, if this thing's going to go to highs, I need to get involved. So funds are buying very late. The funds that are on the ball were accumulating down here and doing the work down here, and they may be scaling a little bit as it goes up, but then they've done all the aggressive buying at the low. So who's involved in this? You're like, well, who is it? The shorts possibly kind of painfully getting squeezed out. Longs forced to get in because they just see it coming to hit highs. And so you get this really unusual situation where it's just this dynamic of the rally just flips. It just flips and you can just feel it. It's just a complete different scenario. And I think this is something that's, I know short squeezes are nothing new, guys. And, you know, is this a short squeeze? Possibly to some extent, but it's more like, oh, people think, oh, I'm going to miss out on the next big run. I need to get in some stuff. Or is it a liquidity issue? Is there just liquidity getting sucked away from the market because there's so much headline risk that it's causing this rally? Whatever it is, it just changes, the sentiment changes. And you just see this relentless bid, kind of any dips are bought, and it just feels like it should be running out of steam, but it just goes another day, and it just goes another day, and it goes another day, and it goes another day, and it's just people who are short is why you kind of have to manage your risk. You know, I'm one of the people who will be shorting this, and taking a stop and going, I'm wrong, and then trying to reassess. And that was one of the videos I talked about. But some people will be shorting it, and you've almost got to say to yourself, all right, okay, let this go where it wants to go, because I don't want to get long on this. Intraday, yeah, I plays intraday, but I don't want to particularly start chasing a 20 day, but 10, 15 day aggressive rally and buying on day 11. Maybe I should, maybe the statistics show that you should be doing that, but that's not me. I need to see some sort of retracement. But of course, that's okay if I'm flat and I'm neutral, you're flat and you're neutral, you're waiting for the right opportunity. If you're short looking for that to cover, that's stinging. If you're forced to be, if you know you have to get long because, hey, I'm not long, all the other funds are getting long, the benchmark is rallying, I'm not positioned. As a fund manager, you have to position. You've got much more pressure than you and I as a retail traders who are just shrugging the shoulders going, all right, don't really get this, let me just let this do something. Let it do another sequence, let it do a couple of down days, and then I'll reassess. Or just kind of, I look at it, I go, right, do what you need to do, give me 2 red days, then I'll look at that and go, right, do I want to retest the highs? Do I think it's going to continue? And some kind of stamp that goes, right, things have changed a little bit. But what's interesting to me is that, you know, this is the kind of a modern market conditions. You know, these times where we get this rally, and then just presses and just goes way further than anyone expected. So what do we do, and how do identify this? I think identifying it by just watching where you'd expect the normal market to bounce, you know, 30% up, 50% up maybe, and when it just starts to squeeze more and more, that's where we're in an unusual phase. And that's when you've got to start to look at things like timing. We're coming up to the quarter end. Is this a real just squeeze into the quarter end and then it's just going to collapse at the end of the quarter? That's something to consider. You know, what's driving this? Is this something that you're not seeing? Is it something that you're just missing? And you know, when you kind of analyze this market and you go, hey, do you know what? This doesn't feel sustainable. It feels stretched. As soon as you feel that, that's probably the time to get long. When you feel like it's, yeah, this is going way too far, there's probably a couple more days in it. So at the very least, just hold back on the short. But if you're feeling aggressive, maybe obviously keeping the risk managed and trying to fine tune it as best you can. But that first dip intraday you think it's going to fall through the floor might be the one to buy, because it might be the one that people are just praying for, and they're so early on it, you might get those other 2 or 3 days of extra stretch that just really kind of jacks up the move and really stretches things and puts everything in overbought condition. You know, everyone's talking about the oscillators are overbought and all this kind of stuff and rah, rah, rah. And yeah, but that's when sometimes you get that extra bit of juice. And so when you're looking at things, is this rally sustainable? Think about this. The dynamics of the rally shift at some point. They change from a kind of bounce off the lows type rally to a, geez, this could go to highs rally. This could go back to, and there's a slight fear in the air. And as a trader, if you can get good at smelling that fear, and it might feel like you're chasing things, and absolutely it does, but this might be a setup that you can put in your playbook that says, hey, under these conditions, when this rally crosses the threshold and goes into a fear-based hated rally, I'm going to get long and I'm going to see how far I can ride that. And that might be something to consider. I know it's something I'm looking at a little bit more closely now, analysing this type of stuff and saying, okay, how can I still want to try and get short on that first pop. That's just always going to work for me most of the time. But sometimes with this hated rally, so if I'm going to spot a hated rally, a rally where everyone's going, can it continue? Then there might be an opportunity to flip that, reverse that, and squeeze the last little couple of days drops out of that. If you're an intraday trader, aligning only long on those days, trying to find those moves, early flushes to the downside of the open. All right, guys, take care. See you next one. Bye-bye.